The following is a presentation of TFNN. Live at TFNN, the Bull Bear Binary Option Hour. Brought to you by Nadex. Call now. Toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom O'Brien and Darrell Martin.
Welcome, folks. Darrell Martin, Tom O'Brien. Appreciate you growling and prowling with us out here. We have the Dow right now up 169, Nasdaq up 51, S&Ps are up 20, gold is down 20, you get silver off 19 cents, bonds, you get the 10-year down 12 ticks, the 30-year off 8 ticks, and King Dollar, folks, is up over 1,000 ticks. We're at 86.76. This is the final day of our $10,000 cash giveaway contest, and what a beautiful day it is to have that happening. If you come over to our website at TFNN, you hit the leaderboard, you'll see that the top dog right now has $47,000 in profit. That's the number one. The number 10 is $9,000 in profit. And I expect what you're going to see out here today is no doubt a lot of fluctuations because of the way that this market has moved. You can be short gold, long the dollar, long the market. Those fluctuations are going to be pretty amazing. Don't forget our man, Mr. Darrell Martin, each and every trading day has an outstanding show right here at 1 o'clock, 1 to 2. He specializes in that Nadex platform. And if you are in this contest, make sure you trade, because each and every trading day, including today, we're giving away $100 cash prizes, as well as the winner we'll announce on Monday. Darrell Martin, what's going on?
What's happening, man?
How you doing, man?
This volatility is insane.
It really is insane. And when we talk real money, folks, okay, the aspect of what happened inside the gold market today, or the dollar, okay, is absolutely incredible. If you trade this Nadex platform, what you're going to know is that your amount of risk versus what the reward can be is extraordinary, because this move was absolutely extraordinary. There's no two ways about it. You got gold down there at 1194, and if you go over to the dollar index, I don't think I've ever seen the dollar move like this. The dollar right now is up 1,100 ticks.
I got the Euro-dollar 5 ticks away from my target at 2,500.
Yeah.
Which I thought was a little insane when I said it, but I'm like, I was looking at 25.50 break. I'm like, we're going to 25, and bam.
Yeah. Now let's go right over, because we know that this is the last day, folks. So you want to basically, depending on where you are inside this contest, you basically want to lay it on. So if we start out with the S&P, okay, so remember, folks, too, that when you get an account set up, and you can set up a demo account right here, right now, whether you're in the contest or not, then you can go over and test drive Darrell's analyzer. And what the analyzer is going to do is that it will give you the best contract in order to trade. And as we're talking about the analyzer, let's talk a little bit about your deviation level first, because look at this thing here. Talk to me about this. This is a trip, man. So what's down to the third deviation? What are we looking at? We're
at Euro-dollar, man.
Look at that thing, man. Oh. Wow.
I saw that break. I was looking at a break below 1.5 going all the way down to 3. And I was like, you know what, with what's been happening,
right?
As crazy as it sounds in my head, I'm like, I think it's going there.
Yep. And
I looked at a 25.80 break, and then a 25.50 break, and then I was like, well, the next target is going to be basically 2,500.
Yeah.
And my deviation is 24.89, but you know how round numbers are in trading.
Yes.
So I'm going to round it off like right around 2,500. But yeah, and so I just wrote it down and been going.
That's amazing, man. So look at that. This is interesting. So even 10 to 12. So what you have here. You talk about, it's interesting. So they got volatility into these big time, too, into these contracts, right? Yeah, I see what's happening, too. If we go over to the Nadex platform, okay, I got to find a few trades here. 1 second. Let me see this thing. So if I go into, no, S&Ps, what did I just do here? Okay, so 10 to 12. The S&P right now, so you got the E-minis are at 1058. So if I want to, you can use that analyzer and find me a contract. Of course, you know what I want to do with it, right? Sell it.
I can't imagine
Sell
what
it.
you would want to do with it, Tommy.
No, I know. It's interesting here, though. I pulled up, so the 1050 to 1060, that doesn't work. Yeah, that's interesting. So because 1057, the most I can get for that right now is 1056, maybe 1056 and a quarter. Okay, let me rearrange this thing here. One second. Let me go over the. It's going to be interesting to see if. So gold is at 1194. The dollar, as the extension is out here, and folks, this is a dead cat bounce. This is going to be a beautiful setup, man. If you're a bear, you want to be all over this. If you're a bull, God bless you.
It was nice knowing you.
Yeah, totally. But the bottom, what you have out here is that you can expect you're going to get lighter volume. The S&P itself is not going to even make it back to the 196.77. The expansion up here. Yeah, it's right at ice. See, it's right at ice. This is it, man. So watch. On the 10-minute, the SPY, if you want to watch how this shakes out, folks, you came down on the 10-minute yesterday, 2 days ago, and we came down with 8.3 million. We just went into that with with 6.2. So what that sets up, and this is set up like basically, once you get back inside, let's see what, you only need 7 more pennies, and then you get back inside 195.04. That's how bizarre this is. This is going to be wild watching
this. Well, we're sitting right at one deviation at 1958 right now.
Yeah, so this is going to be wild watching this whole thing shake out. Let's go. If I go over to the gold market for a second, because the gold should have some. That's not ready either. The S&P is ready though.
No, we're at the high. We're at the high of the day on the S&P.
Yeah, fine.
I'd have stops at 1962.
I need an S&P contract. Okay, so let's go into the Nadex platform. We're going into the platform and. We're going to your analyzer. Let me pull this baby up. So indices, and of course I like the spreads. You can go with the binaries, and if you're in the contest and you're not trading real cash, then you could absolutely take a risk on the binaries.
Put your first target at around 1948, and then it may pull back to settlement like it did yesterday down to 1938. So you got probably a 10 to 20 point move. Say first target. Where are your targets at? I would say that at 58 right here, a realistic target would be 52. I mean, that's only 6 points, but that's a realistic target. Okay, that's 0.7 deviations.
Yeah.
So 48's half and 38's 7.
If we get, depending on how you get back inside this 1957 where we are right now. See, we're right at it. This bar, folks, that went topside, you had the juice that went topside. It went topside with 110,000 contracts. Then you basically had 76,000, and that was going into ICE. That's what it's going into the downdraft, which I think it had 100 and something thousand.
And look, we have our one deviation, which means our expected movement on the day is 1958 to the tick.
Yeah, that's sweet. We
gotta love the confluence.
Right. No, there's no doubt about that, man. There's no doubt about that. There he is. See, Jay's got this thing down. So it's the Wall Street 30 again. Okay, hold it. I'll get my head wrapped around that. Giving up 34 points for $336 with a maximum loss of 62. Yeah, that's a good trade. Okay, 1 second. Hold on. And so one of our targets in the den here, folks, this is, and he loves this Wall Street 30, that you'd be giving up, it's the 16,500 to 16,900. Yeah, that makes sense. Let me just see inside here. So the strength inside the Dow right now is Disney is up 177, Goldman is up 340, JP Morgan's up $1, Merck's up $1. Taken away from it, there's only one stock that's negative, and that's ExxonMobil. If we take that baby, oh yeah, that's a good one. Because if you take a look at the diamonds, what you're going to see here is that the diamonds already led it. So watch this with the diamonds, folks. The diamonds were going into a downdraft. That downdraft there had 720,000 shares traded. On the open today, we did 670, and then guess what? As I tested it, it did 272. So if you do go over there, that would be a decent trade, and that would be selling the Dow. Let me pull this back up again. So I got the spreads. There's the Wall Street Journal. So Wall Street 30. And let me just make sure. The 415. There it is right there. 415. And we're talking the 16,500 to 16,900. I got to get closer to these screens. I got it. Okay. So, yeah, that's it right there. So you sell 10. Yeah, he got it better than I got it right here. Okay, interesting. So this would be giving up. It would be $900 for 2,000. He got it quicker than. Yeah, because he was only giving up 30. Oh no, that's the same thing basically. That's a good trade.
He sold out right off the deviation off those with a 688 too.
Yeah, that's definitely a good trade. There's no doubt about that. The biggest ones, if you're in this contest right now, folks, would be, see, the S&P is going to give it up. The biggest ones would be whether you're buying 10 contracts, and you definitely have extra money in there, it would be going long gold or going short the dollar, in the next couple hours, because of the volatility inside both of those characteristics. If we go over to the dollar, what you're going to see is that the dollar not only went topside, it went topside in an incredible way. 41,000 contracts, and if it's going to basically give anything up, it would give it up in the next hour and a half or 2 hours. But the longer-term deal with the dollar is that this wants to go straight to 89. That's how this is set up right now. The S&Ps themselves, though, I suspect what you're going to see by the end of the day, this is a dead cat bounce. And you get a dead cat bounce on lighter volume, and all it's done is set up a monster ABC structure on the way down. If you take a look at this SPX, what you have is that your A point now is 2019, and your B is 1926. Yeah, so you get a 95-point A to B structure, which is pretty intense. And what you also have, and this is, watch how this shakes out, because this will be interesting to see how this plays out today. The S&P itself, folks, has broken the much longer-term trend that goes back to an S&P 1340. Forget the deal about the February 5th downdraft, and that's at the 1737. This has broken it with conviction, depending where we close today, but it definitely broke it with conviction. This is Darrell Martin, Tom O'Brien. You stay right there, folks. We're coming right back. Dow Industrials up 145, NASDAQ up 45, S&Ps are up 18, gold's down 20. We're going to be right back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Andy Hecht's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Darrell Martin, Tom O'Brien. Appreciate you growling and prowling with us out here. Right now, you get the Dow up 138, Nasdaq's up 41, S&Ps are up 16, and the volatility is out here in spades. You get gold down 21, you get the dollar up 1,100 ticks, and you can expect this volatility to continue, folks, okay? The move on the currency market is going to basically keep this market in conniptions in a huge way. There's as Darrell was just saying, the euro goes one way, of course the dollar goes the other. The euro right now is at 125. Gold is at the 1193 area. And if you want to see what we're doing, is that if you go look at the GLD, you're testing those lows out there, and the test is on dramatically lighter volume. It doesn't mean you can't spike it. 114.68 is the number. We've hit 114.66 or at 114.71. That correlation, however, you talk about we're gonna do all of about 40 million on a weekly basis versus 109 million. So there's a question in the den. Let's see, gold getting crushed. Tom, what level can it hit by 130 today? And so if I go over to the let's go. We'll do two different things here. You go to the GLD first, and that contract right there, the GLD and that equity, the expansion on the way down after 10 o'clock is drying up beyond belief, meaning at 10 o'clock we did 1.1 million. At 10:10 we did 400,000. And right now we're dealing with 6 minutes into it. So in that correlation there, the risk versus the reward would be that you're going long. And you'll be going long saying that, let me go over to the contract again, GCZ FOA. So in that correlation, if we take a look at the contract itself, let me put this on 1 day so we can get...
We're sitting right at a -2 deviation level. If we break down like 1185, 1180, but it could easily, just based on the volume pattern right here like you're talking about, could easily just bounce right up off of that.
Right. Now, see, check this out, folks, okay? So on this one, if you're trading this out for the 130 close, you'd be gunning for 1198, and you're at 1193. Where I'm going with 1198, the downdraft that happened at 830. Gold opens at the pit at 820. We got to 1198, and you did that with big volume, 21,000 contracts. So on any bounce at that level there, it's going to be hard to get through. You know, so that would be the. Let's go over there and let's go say, okay, let me see what we got. So what did I just say? So we want a box as close as we can get to 1193. That's what we're talking here on the 130. So if I go back over to commodities, and you go into gold, and we go to 130. That's not bad. You get an 1190 out there. It's interesting. Buy. Yeah, that would be the trade. Because if you're buying one, you'd be risking $50 for 350. If you're buying 10, you're risking 500 for 3,500. Yeah, that would be the number.
What's the 1190 you found?
1190 to 1230.
Ah, there we go.
Yeah, okay. That's the number, man.
That's a middle spread.
Yeah, you know. And see, the S&Ps are giving it up right now. This is going to be, folks, if you are in this market right now, this is the type of market that you're not going to want to be sleeping for the next 3 to 4 months. That's the reality. This
the competition was just a kickoff, man.
Well, what happens is this: is that this market here, okay, is a trader's paradise. And what happens is that, yeah, you want to put your trades in, you want to put your stops in, and it is about time. I mean, it is about time. There's no doubt, man. And what happens is that when you get extensions, then you get a counter trend bounce up to ice. You get the sell-off again. You get the counter trend bounce. And what the difference is, just so you understand the context, is that there's no doubt the bulls have had to run in an extraordinary way. What the difference is when you get a market like this is that the acceleration on the way down is much quicker. And if you have the trades in and take the money off, the bread is much quicker. That's just how it goes. And what you don't want to do, though, is you basically want to keep your money management in place. You don't want to keep parlaying that deal. That's the difference, because the bounces are extraordinary, and they're always going to be extraordinary. And that's how you can tell you get a market that's going downtown versus a steady going uptown. Darrell Martin, Tom O'Brien, you stay right there, folks. We have the Dow right now up 130, Nasdaq's up 43, S&Ps are up 17, gold's down 23, the dollar's up 1,150 ticks. We're going to be right back, folks.
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. You get the Dow up 123, Nasdaq up 42, S&Ps are up 15, gold is down 22. You get silver off 30 cents. Bonds, the 10-year is off 14, the 30-year is off 9. The amazing part about the bond market, folks, is that it just refuses to back down. This move right here, if you want to see something that's pretty incredible, is that when we went topside on Wednesday, you went topside with 1.9 million contracts. We're going to do all of about 1.2, 1.3 coming into that area today. This is just setting up an ABC structure on the way up. That's on your 10-year. Your 30-year USZ 4, same type of setup on your 30-year. We've done 289,000 contracts now. Right now, that'll set up about 325. You went topside with 521. The 30-year, if you trade bonds, it's really cool watching the 30-year is leading the 10-year. And, you know, depending on how long you've been in this market, we used to do all the time, now this goes back a long time ago, but you would always trade the equity market off the bond market. You could trade it off the 30-year, and you'd have about a minute to a minute and a half heads up as to where the correlation would come in the equity market. That doesn't fly anymore, but what I have been noticing is that the 30-year is leading the 10-year, so you do have time inside the 10-year if you're trading the 10-year. year using the 30-year. Dow Industrials right now, man, Jay is definitely in the money in a good way. He's hitting it all over the place.
We're doing well on our S&P trade too, up about 250 right now in contracts.
Yeah. They, you know, this is a market, folks, that you know, depending where you're at, you know, of course the bears are going to have some fun here because it's always fast, and you know.
Bulls go up the stairs, bears go out the window, right?
Oh man, it's so crazy, and you know, and we haven't had a market like this for so long, and you know, and you can get both sides of it. There's no doubt about that, you know, and that's what's pretty cool about the aspect of, you know, trading the market, because the
Yesterday
bounces.
I was writing it down and I wrote it all the way back up.
And the bounces are incredible. There's no doubt about it. Yeah, you can get confused in the middle of that, you know. So what you want to do is make sure you have a game plan in the morning. What you do not want to do is be in the middle of the day and change the game plan. You know,
you'll get hosed because your emotions will take you for a very expensive ride.
You know what happens is that what tends to happen is that, you know, you put on a couple good trades and they have the bread, so they take a little bit more risk, and you know, you just haven't really thought it through before the fact of being inside the market. If you think it through before the fact, and then what you really should do in a type of market like this, you do a few of them, you hit it, and guess what? Walk away from the screen. You know, the next day, this is going to be here, so the next day it's going to be here. Don't worry that you're not going to get these monster bounces in order to sell again, or if you're a bull, that you're not going to be able to wait for these downdrafts, and everyone's going to think the end of the world was there, but guess what? It's not. You're going to get that bounce, you know. What's going to be intriguing here today is what I brought up, you know, when Darrell and I were talking at the beginning of the program, and this is a big one. It's going to be, where does the SPX close out here today? Because what you do have, and what is the volume? Right now, the volume characteristic, okay, folks, is dead. I mean, you know, it's gonna come in really sweet in the context of, you know, probably do about 110, 120 million into 170. That characteristic is going to be there. The real key is going to be when you broke the longer trend line, where will you close? Will you close inside of that trend line? Because if you close inside of that trend line, well, guess what? That just means that, you know, you can go higher. You close in the bottom of that trend line, guess what? That is giving you an indication that this baby is going south. And right now, though, this is wild. So right now, folks, when you do this, and you have to get as close as you can, but right now, we're laying right on the line. So we're at 195.96. That line sets up at about 195.87. That could make it. So, and volume-wise, we've already done it. Now, it's not even the end of the day. We've already done 605 million shares going into 592. So it's already broke it there. The real question is going to be, where does it close? And this is a clean line, man. It is. And what happens with trend lines, by the way, channel lines, trend lines, all of the above, you always want them basically getting into 3 different points. This one here is into 1, 2, 3, 4, 5, 6, 7 points. And when you look at those points, what you're going to see is that they've been hammering this line since 2012. And each time, guess what? It has rejected it. But each time, that puts more pressure on the downward side. You know, so it's going to be wild watching this out, how it shakes out, because what you're going to get a lot of great education as to how these lines also set up, you know, because it's like, it's all speculation, but the reality is that when you look at them, and you look at them after they're finished, it looks so clean, it's amazing. Do you know what I mean, Darrell? It's like
well, it's always, man, the left side is always the cleanest side of my chart.
Yeah, no, it is. It really is. There's no doubt about that, man.
Now I got a question for you.
Yeah.
We're looking at the S&P 500 futures, and I see all the time that you go back and you're looking over like at the spiders, or you're looking at the diamonds on the Dow, you know, or IWM or Russell, whatever.
Right.
Why hop over to the ETFs? What's the advantage there of versus just staying on a futures chart?
Well, I do that for the listeners.
Well, I don't know if there's like maybe a different advantage that you get on the ETFs that you just don't see as clearly on the futures. That's why I'm asking.
No, a lot of people don't have the futures, number one. Okay, so
okay,
but what does happen is this. Okay, is that does give you correlation. Okay, so I still do it anyway. You see what I'm saying?
You've been doing it forever, and it just sort of adds up. But yeah. So you've basically seen that they line up. Now, to that correlation, have you ever seen sometimes there maybe be a difference on the ETF versus the future?
Yes, and then you don't do it.
Okay, so that's like a warning sign, like stay away.
Yeah. What normally happens is this: if you're see, this S&P is going to fall apart right now. This is
I know,
really
I'm
cool.
loving it. I hit target 1. I'm going for target 2, target 3. Target 2 is 1949. Target 3 is 1939.
Yeah, it's sweet. What happens is that I'm always looking for correlations. And what you're looking for, folks, is harmony. Okay? So, you go to the futures, you go to the ETF. What I normally would do is, whether it's the bonds or the dollar, now what I've been doing is, I just said, a little bit prior, is that the 30 years pushing the 10-year. So it's like, okay, man, where's the 30-year going if you're trading the bond market? So you're always looking for those types of correlations. And
now, okay, go ahead.
No, go ahead.
I can say for the listeners, like on when you're doing, let's say you're doing the dollar, and you're not trading, you can't trade DX because you don't trade the futures. What is a good ETF to trade the dollar?
That gets what happens.
I know it gets harder because I know there's $0 ETFs.
It's not that it's harder. What it is this: is that most of the time the movement is so slow. This is different today, but what ends up happening, the movement inside is so slow. It's like
seeing it inside of without a leveraged future would not necessarily be worth your time.
Yeah, the dollar index is great to trade though, and
I love DX.
Yeah. That's a nice vehicle, man.
well, and what's the take? I want to say it's $5. Isn't that right?
And what you get is that the stop placements are cool, folks. Okay, it's liquid. You're not going to get basically hammered, meaning on the illiquidity out of it. Look at this.
It doesn't seem to just go nuts like Russell as easily. It seems to be a little smoother.
Yeah, the Russell's a trip.
I love the Russell, but it's like you're getting on a wild Mustang.
We love the Russell when we're right. And what happens with the Russell? If you trade the Russell, folks, and even I'm sure you've seen this in the IWM, the TZA, the TWM. Trade the Russell. It's coming into the close where the flip is coming. It's like, okay. And I suspect what that is that it's probably the funds that are trying to get basically delta neutral. Do you know what I mean? And what they're trying to do is just get the double and triple ETF structures correct, because the Russell into the close is like insane, man. I mean, they can pour it on in an extraordinary way.
I know, that's why I like it.
Hey, listen, I love it when I'm right, and I can't stand it when I'm wrong, because you can be right all day, and in 2 seconds, folks, they can basically take it.
But you get to trade it on Nadex.
Oh, that's a whole different ballgame. You got no. There's no doubt.
There's a lot of things that I used to not like so much that I like more than now that I have Nadex. So me and silver used to have a little issue, but now I like silver with Nadex.
There's no doubt, folks. And what you have, the more volatile the market gets, the better off that Nadex is. So if you haven't tried it, get over there, try it out, open that demo account. They'll put $25,000 of paper money in your account. You can be trading it, right here today. You can start trading it Monday morning.
Talk about results. Have you seen what some of these traders have been pulling off?
I know, it's huge, man.
I don't care if your demo or not. I mean, my demo is pretty big, so I get it. I haven't seen too many people do it. I mean, I have like 8 million in my demo, but that's over like a couple of years. And you look at this, and these people in here, I mean, they're already started at 25. They're up at $47,000, $50,000 in a few days.
Right. So watch this, folks. The leaderboard. If you go over to TFNN, and you'll see it right on. You'll see you just hit the bar. It'll say leaderboard. Those numbers are profit. It's not what they have. They started off with 25,000, but the profit as of last night, the top guy or woman, I'm not sure because we only got the first initials, is 47,000. The second's 41, third's 29, 20, and the 10th one is still 9. So they're big numbers. I think what's really impressive is that
Norwood impresses me. The guy's held second place every single day for 4 days.
Yeah, that's hard, man. We know how hard that is.
I mean, the first is coming in and out. I mean, that's musical chairs. But man, he's staying right in there. He's gonna come in.
Yeah,
I'm sort of rooting for him a little bit, man. Being all the way up there.
I agree.
Boom,
I agree.
Right at the end.
And what we will have today, I think, because of the volatility in the marketplace, you're going to have pretty heavy changes. Do you know what I mean?
Mm-hmm. We had some big moves yesterday in the
yeah, we did.
There. So we had people in first place that disappeared off the list.
Yeah.
You know.
Right.
And I mean, and see, that's the thing that happens. People come in there, what if I just go crazy and somebody just gets lucky? It's like, we can get lucky for a day.
Yeah.
Now, you may pile up on some $5 binaries and just clean house.
Right.
But if you keep doing it, which somebody's going to keep doing it, you're going to fall down. So it's the people that I see on there, like Fady staying up there day after day after day, Norwood staying up there day after day after day. Those are the people that have my
You know what's wild is that I'm looking at Fady, and I happen to know, I know Fady because well, isn't this? I think this guy's a chiropractor, isn't he?
Yeah.
Yeah.
Dr. Fady.
Yeah, exactly. And so it's so cool, folks, because the setup there. And so listen to this. I got to tell you, this is a funny story too, because he's in the same office where my dentist is, right? My dentist is on one side of the building. He's on the other side of the building. And I walk in there one day, and he comes out, and he says, oh, yeah, I got Stephen Basil on. I'm laughing. I'm saying to myself, oh, my God. He's right. You know what I mean? It's like, okay, it's a beautiful thing, man. Totally.
So, but it's cool watching these, because what I start looking for, like, out of the gate, because we've done a couple of these now,
Yeah.
And they're always fun. And, people get into it. They learn about it. You got people that they rise to the top, fall to the bottom, and everything. But what I've learned to look for is just those people that stay up there and can hold it every single day.
But there's no doubt. And it's interesting what Jay's saying in the den right now is that on the weekly basis, the weeklies are going to make a difference too, because someone's got to come in on the weeklies at the end of.
Well, and that's something you can't see. That's sort of tricky. Okay?
No, you can't.
It's based on the balance,
right?
And when your risk is put up, right, up front, and so. If people have contracts on, between like 4 and 6 when they have the close, 5 and 6 when they have the close,
right?
That's not accounted into the balance. So any dailies they had on rolling over, any weeklies they have on throughout the week, like we're going to see all that either come to fruition or not so much, one of the two.
Yeah.
Right there at the end on Friday. So if anybody's been holding on to some losses or some losses wouldn't hurt them because it can't go any lower. But there could be definitely some surprise profits pop up on Friday.
Yeah.
Here today at the end of the day.
Yeah, no doubt. We go take a look at some of these Dow stocks out here. You got, let me just pull this up. So when we first pulled the Dow up, and we only had one Dow stock that was in the red. Oh, look at this. This is interesting. So now what's happened in this pullback, Chevron got in the red, 47 cents. Caterpillar's in the red, 33. Triple M is in the red. So from the get-go, and also Goldman is up the top right now. But yeah, there's a big swap that's happening inside this Dow Industrials right now. And you got to remember that you get window dressing is over. Markets basically a clear sailing for the next week and a half, meaning. No heavy buying pressure in there. So, we'll see where this shakes out. The Dow's giving it up pretty quick, though. This is interesting, man, because percentage-wise, folks...
And I'm a little pissed. I'm in the S&P right now.
Yeah, well, percentage-wise. So check this out. When Darrell and I just started the program, the Dow was up almost 1%. Now it's only up 0.7. You get the NASDAQ up 0.9, and the S&P are up 0.8. That's not enough to hold into the close, folks. This is Tom O'Brien, Darrell Martin. You stay right there, folks. We'll be coming right back. Dow Industrials right now up 119, NASDAQ up 43, S&Ps are up 15. We're going to be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Darrell Mott, Tom O'Brien. 877, Dow's up 131 right now. Nasdaq's up 47. S&Ps are up 16. Don't forget, folks, at TFNN, we program each and every trading day, live content, 8 in the morning to 6 in the evening. You can get all of that right on your cell phone, TFNN.mobi. And don't forget, Darrell comes right back at 1 o'clock, 1 to 2. If you're in this Nadex contest, bottom line is that you want to lay these babies on. And the King Dollar, folks, is just incredible. So King Dollar has hit 86.87. And if you go take a look at this continuous...
By the way, your dollar hit my 2,500 target, so I'm out.
That's a beautiful thing, man.
80 take profit.
You're going to have to take your wife to the Four Seasons, man.
I know. She cashes in every week.
That's a beautiful thing. And you know, the thing that's amazing, folks, it's been a nonstop move. And, you know, it's not going to stop at this point because you're too close to the swing point. You know, you're at 86, 88. The first swing is 88, 80. And I suspect 89 is game. So this is going to be pretty intense of how this whole thing shakes out. Gold right now is down 22. You're at 1192. So if we go over to that gold market and we take a look at gold right now, GCZ FOA. And Friday is basically the heaviest day in gold volatility-wise. See, there's no juice in this right now to the lows, though. So they're going to have to basically hit it to get it lower. So how gold closes today is going to be a big deal, folks. The reason being is that, I agree, Jay's saying the spike. There's going to be a spike. The real question is, the way that this is set up right now, the spike would bring you back up to 1198. Because it's just not there. But it doesn't mean that someone just can't come in, that's right, and whack it down and hit it good and see if there's any more stops. See, thus far, though, this is what you have. Thus far, when an operator is coming in, they'll push it as far as down as they can get it down if they're going to buy it. And they're looking for the stops. And you can see in the future market, there's no more stops. Because when there's a stop, folks, what happens is this. If there's a level with a whole bunch of stops, when they push it down, it hits the stop and then falls apart. And thus far, you can see that they've already pushed it down 9 points from the last time with volume, or 6 points. Because 1198 is the last time with big volume. So they've pushed it lower, and there's no more sellers down there. Yeah, if you're going to buy actual physical, too, that platinum, right now, platinum's down $44 at $12.24. It might be hard to find platinum coins right now, but that would be the number. We get a question about Great Panther, about where would you put the stop. Great Panther's down at $91 right now. You'd put it right under 89 cents. 89 cents is where it spiked down from last week. And what that spike was, by the way, folks, this is how this works, which is really unfortunate in the equity market in general. That spike would have been when the broker-dealer knew that, and this is where the broker-dealers trade right against these stocks all the time. What's going on is that Great Panther filed yesterday for an $80 million shelf secondary. So when you file a shelf, what ends up happening is that you file it, and that means you can basically put it out anytime you want. And I expect what you had happen there is that 4 days last week, it went down to 89 and then closed at 105. Someone found that out. That's what was going on. This is Darrell Martin, Tom O'Brien. We appreciate you growling and prowling with us. Appreciate you with the contest. You stay right there, folks. Darrell's going to be coming back at 1. I'm going to be coming back at 3. Darrell, have a great one, a safe one, man.
You have a great weekend.
Great trading, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.